Welcome everyone to our live Q&A session. My name is Natalie and I am here with Minna. Today we will be answering all of your solo 401k and self-directed IRA questions. We do have a lot of questions that were submitted, so we are going to focus on answering those today. But if you have additional questions, please type them up in the Q&A chat area. We will make our best effort to answer them, but as an alternative, I would love for you to register for our next live Q&A session, which will be on Monday, April 24th at 11 a.m. Pacific Standard Time. And before we get started today, I would love to give a brief introduction about Minna. Minna is the Senior Account Manager at Sense Financial. She directs the processing of retirement plans, and she assists and partners with clients in the process of creating their self-directed retirement accounts with checkbook control. And she also coordinates communication efforts towards educating clients about self-directed IRA and Solo 401k. So Minna, thank you for joining us today and taking the time to answer the questions.
Hi, everyone. Thanks so much for joining us. I'm really looking forward to answering your questions today.
We are going to go ahead and get started. Our first question is from Richard. I have your Solo 401k. What is the checkbook IRA?
Thanks so much for your question, Richard. So yes, the checkbook IRA also goes by the name of IRA LLC, goes also by, sometimes it's called a real estate IRA or an IRA-owned LLC. The checkbook IRA is another product that we at Sense Financial offer. Our main ones are the Solo 401k and the checkbook IRA. Your question was, I think, asking about the differences between the two. So just to highlight for the checkbook IRA, the structure is like its name. It includes both an IRA and an LLC. The IRA owns the LLC. You as the client are named as the manager of the LLC. And what that structure does is it gives you checkbook control over your retirement funds. So that's, basically what we specialize in with Sense Financial is retirement accounts that give you checkbook control over them. So the checkbook IRA is another structure like that. Just to highlight some of the differences, like I mentioned, the IRA LLC has both the IRA and the LLC component. Both of those need to be established a certain way and so forth. So you can already see there, it's a little bit more work to create and then also maintain. So that's one of the differences between the checkbook IRA and the Solo 401k. The checkbook IRA is a little bit more work to maintain because you do have to maintain those two aspects. Again, same kind of net result is that you'll get checkbook control over your retirement funds. It's just with the checkbook IRA, it's a little bit more work to establish and then maintain. One other thing I would mention as far as with the checkbook IRA, because it has an IRA as part of it, then you are subject to the contribution limits of the IRA, which, as you probably know, it's a lot lower than with the Solo 401k. That's one of the special features about the Solo 401k. It's got very high contribution limits. The IRA is a lot lower. So the checkbook IRA is a product that's probably a better fit for clients who've built up their retirement funds a good amount and just want to get the checkbook control over them as far as investing. So that's another difference I would mention about the checkbook IRA. And then just last thing is the Solo 401k, you do need to qualify for it. So meaning you have to have a form of self-employment. So when a client comes to us, if they don't have that form of self-employment, then that's usually when they'll opt for the checkbook IRA. So hope that answers your question.
And the next question is from Alan. Do you know of any banks that support multiple account types?
Great question, Alan. So this actually gives me a good opportunity to highlight our recommended banks. So we do have some. If you come to us and we establish a Solo 401k for you, we do have a couple recommended banks. Our preferred bank is Solera, and if you've been watching some of our past videos, you might have seen the interview with Creighton with Solera. That's a good video to check out if you haven't already. But yes, Solera would be more than happy to help our clients in setting up accounts for their solo 401k. And this gives me also an opportunity to mention with the solo 401k, keep in mind that the plan does require you to have separate accounts for the different types of monies within your plan. So some examples of different types would be rollover funds is one type, employee contributions is another type, employer contributions, Roth funds. You do want to set up separate accounts for those different types of monies. And again, our preferred banks are, definitely familiar with that and more than happy to help you with that.
Gabrielle is asking for us to please go over your services and how you assist us with our accounts.
Great question. Thank you, Gabrielle, for that. So yes, I mean, it depends on which product we're talking about. I would say just in general, our services, the bulk of it will be focused more on the establishment, at least at first. So like I mentioned, the checkbook IRA, it's a little bit more labor intensive to create. So if we're talking about our services with the checkbook IRA, some of those will include, establishing the LLC, which is a special purpose single member LLC for your IRA, getting you started as far as setting up the IRA, working with you and your new IRA custodian in funding that IRA, and then those moving over to the LLC once the IRA is funded. From that point forward, your IRA LLC or checkbook IRA is established. And our role at that point is to help you maintain that. So we will help collect the fees on an annual basis for the custodial fee for that IRA. And we're definitely available as a resource, of course, sending you reminders for anything that might need to be done on behalf of the IRA. Again, working with the IRA custodian for any maintenance type items and so forth. So that's with the checkbook IRA. Our services with the solo 401k, again, as far as establishing the solo 401k, we help create the plan documents for your solo 401k. We do have IRS approved documents. We will help get those created, sent to you, and kind of walk you through the process of funding that solo 401k once it's established. At the end of the day, Sense Financial is here to help clients create those retirement accounts with checkbook control. So really the goal of the products that we offer is to get those retirement accounts under your control. So, Sense Financial does not function as a custodian. Your retirement funds never go to us or through us. Our main goal is really to empower you and put you in the position, like in the driver's seat of being able to invest your 401k. So really, once your retirement account with checkbook control is established, our main role is just to, again, keep you compliant and kind of, provide the resources to help you do that well. And so our services, also include just providing resources, even like this Q&A. We have special websites that we've designed just for our clients with lots of resources, again, just to educate you, help you feel more comfortable with the product that you have, help you feel empowered and educated so that you can best direct your retirement funds in the way that you see fit.
Next question is from Jeff. Are there good tax-efficient strategies for pulling money out of your 401k?
Good question, Jeff. So I think I'll mention a couple things here. Of course, anything related to tax, we always recommend that you speak with your CPA, Jeff, just to confirm, because everyone's situations are so specific. But just to mention a couple things. So of course, the solo 401k is a 401k. So it is subject to, the normal rules of pulling funds out of a 401k. So after a certain age, 59 and a half, you can take a personal distribution from your 401k without additional penalties. It will be counted, of course, as taxable income in the year that you decide to do that. So that still applies with the solo 401k. One potential strategy might be to convert your funds to Roth within the solo 401k. So the solo 401k that we create does have a Roth conversion feature, which you can choose to utilize if you like. That meaning that once the funds are in your 401k, if they come in as pre-tax, you can elect to convert those funds to Roth while still keeping them within the 401k. So of course, the advantage with Roth funds is that they're taxed, or they're included as part of your taxable income when you decide to do that Roth conversion, but then they grow tax-free after that. So that might be another strategy to think through. Again, you want to speak with your accountant as far as if that's a good fit for you, or how much and when. Those are things that are worth discussing. And then I think one thing I would mention at the end, maybe, I'm not sure if this is exactly answering your question, but just to mention it, the solo 401k does have also something called a participant loan feature, which allows you to borrow from your 401k. And then once it's in your personal account, you can then use it for any purpose. But from the 401k standpoint, that participant loan is actually an investment. So you pay back that loan, or you pay back your 401k with interest. So that's one way that you can, in a sense, take money out of your 401k, but you put it back in along with interest, and that actually ends up benefiting your 401k. So that doesn't, of course, fall under the category of distribution, which I think you were asking about, Jeff, but just thought I would mention it. It's a nice feature, and some like to utilize that.
Next question is from James. Could you talk a little about estate planning for a solo 401k?
Sure. Great question, James. So included in our plan documents that we send to every client, we always include a blank beneficiary designation form. That's where you would list who you would like the assets to go to in case something were to happen to you. The reason that we include a blank one, besides you being able to, set up your beneficiaries for your 401k once it's first established, is also so in case you ever need to update it, you've got the blank form there as well if you need to update it for any reason. A couple things I will mention about estate planning particularly. Of course, it's not our main area of expertise. And like the last question, for any specific questions, we always recommend that you consult with your estate planning attorney for your individual situation. But one thing I'll mention as far as the solo 401k is that the kind of default setting is that if you're married, the assets are required to go to your spouse, your spouse is the 100% primary beneficiary. You can choose to have someone else as a primary beneficiary, and you'll see this on your form, on your beneficiary designation form. But in that case, the form will need to have your spousal consent or have your spouse sign off on it, and then that will need to be notarized. So just one tip to mention.
Next question is from Brian. I own company A that we have a solo 401k in, but I take no salary from company A. I also own company B that I can take a salary from. Company B in process of setting up their own solo 401k. Can I put money into my solo 401k with company A from my salary from company B?
Good question, Brian. Thank you. So, Brian, your question touches on a couple different things that I would offer to consider. So, number one, just to note, an individual can only have one solo 401k. That's regardless of however many businesses that the individual owns. So in other words, an individual can only have one solo 401k, even if that person owns several businesses. So that's one thing to note. There is a category for that, kind of under the heading controlled group. The rules for controlled group are pretty complex. And whenever this comes up, we always, again, recommend that you consult with your CPA, again, because the rules can be so complex. But yes, basically, to summarize, the IRS views all of those businesses as still being connected to that one individual. And again, that one individual can only have one solo 401k. Another thing to consider is that you can only make contributions to the solo 401k from your compensation from the adopting business of the solo 401k. So Brian, in your scenario, if you've got a solo 401k that has company A as the adopting business, then you can only contribute based on your compensation from company A. As an alternate, scenario, if your solo 401k was adopted by company B, you could only make contributions based on what you earn from company B. So in your scenario, Brian, then it might be worth considering amending your plan so that company B is the adopting business so that you can contribute from what you're earning from company B. Lastly, I'll just throw out a couple other items. We do have a lot of clients who come to us who have several businesses, and one potential way that they address it is to form a parent company, and then that parent company becomes the adopting business of their solo 401k. There's also a term for affiliated business. That might be something, all of these are worth kind of discussing with your CPA. And then you are always more than welcome to contact us as well if you'd like to discuss further. Hope that helps.
Next question is from Frank. I have money invested already from my solo 401k. Can I roll this over to a Roth and leave it in the investment?
Great question, Frank. So yes, the solo 401k has, I think I mentioned it before, that Roth conversion feature. What that means is that once funds, pre-tax funds are in your 401k, you can elect to convert them to Roth while they're still in your solo 401k. So Frank, for your situation, you're talking about if the funds that I'm assuming are pre-tax are already invested in your 401k, can you convert it to Roth? And the answer is yes, you can do that. The main thing that you want to make sure to do is you need to have the value of that investment appraised closest to the date, as close as possible to the date that you wish to convert it to Roth. And that's part of the Roth conversion process, because what you'll do when you decide to convert to Roth is you'll fill out a form that both elects and documents your Roth conversion, and you do have to put the amount on that form. And then the following year, you'll need to issue a 1099-R for that specific amount. So Frank, for you, if you want to convert it while it's still in an investment, then you need to have that investment appraised. And then that's the figure that you would use both on your record keeping form and on the 1099-R. That amount will be counted as your taxable income for the year in which you decide to do the Roth conversion.
Next question is from Sophie. Can a landlord set up a solo 401k?
Good question, Sophie. So I think this would probably be worth more discussion, one-on-one, and you're always welcome to contact us, Sophie. We'd be more than happy to discuss with you. But your question does bring up a good and important point of the solo 401k, and that's regards to eligibility. So in order to qualify for the solo 401k, you do need to have legitimate self-employment activity that has active earned income. By itself, rental income is passive, not active. So if it's just that you have rental properties, then you may not be able to qualify for the solo 401k, because again, you would need active business income, and rental income is counted as passive. It might be worth a discussion with your CPA as far as if that could potentially be structured as property management and structured then as a self-employment business. But again, that would be something you'd want to, ask the assistance of your CPA to kind of nail down and confirm. So.
Isaac is asking, can I assign a property I own to my retirement account if it has a mortgage?
Good question. So I think the key phrase that I'm focusing on your question, Isaac, is it's a property that you own. So thank you for bringing up the topic. There is a whole category of what's called prohibited transactions. Those rules are determined by the IRS. And basically, those rules are designed so that you don't overly benefit, you don't personally benefit, from the retirement account in an unfair way. And so keep in mind that as far as investing, you personally are what the IRS deems as a disqualified person, again, with respect to investing with your 401k. So Isaac, if you own a property personally, if it's in your name, you would not be able to sell it to your 401k. That would be fall under that category of prohibited transactions.
Next question is from Ray Doe. If a different company created the 401k plan, can Sense Financial update the plan as needed?
Great question. Thank you for submitting that. So yes, we actually have a large number of clients who come to us for this exact reason. This is what's called a restatement. So a restatement is where we take the solo 401k that's been established elsewhere, and we restate it so that it's now depending upon our documents. And again, our documents are designed to give you, the maximum level of flexibility and to give you that checkbook control over your funds. So again, a lot of clients come to us for this very purpose. They've had their solo 401k set up by another institution, possibly where that institution acts as custodian, and the client would like to gain checkbook control over their solo 401k. So again, that's how a lot of clients come to us. So absolutely, that's something that we can do and have done for many. Couple things to keep in mind: the solo 401k itself remains active, so you're not terminating that plan. You're simply terminating once we restate your plan. You then are terminating the services of the institution that originally created the plan documents, because again, once it's restated, it's now dependent upon our plan documents, and our plan documents are what gives you that checkbook control. So hopefully that answers your question.
The question is from Frank. Can I transfer real estate invested assets from a solo 401k to a Roth investment?
Thanks for that question, Frank. Not sure if I'm understanding it completely, but again, Frank, feel free to reach out if there's any further details that you can provide to us. If I'm understanding it, or the way that I'm understanding your question is, I think you are referring to that Roth conversion feature, which I mentioned before. Again, like the previous question, if you had a real estate investment already in your solo 401k and would like to convert it to Roth, your plan does allow that. You would simply follow the process to do that. And part of that process would include assessing the value closest to the date of the Roth conversion, and then the following year, making sure that you issue a 1099-R so that amount is included in your taxable income for the year in which you decide to do it. So hope that answers your question, Frank. If not, feel free to reach out.
John is asking, what is the best way to purchase Bitcoin with self-directed 401k? Connect Solera and Coinbase.
Great question, John. Thank you. So we do get a fair amount of questions related to cryptocurrencies and the Solo 401k. So just in general, the way that you would want to do it is once you've got your Solo 401k established, and he mentioned here Solera, so I'm assuming that he's got his checking account for his Solo 401k at Solera. What you would need to do then, John, is set up an account at the cryptocurrency exchange for your 401k. So not for you personally, your 401k is a separate entity. It has its own EIN and so forth. So you would want to set up an account at the cryptocurrency exchange for the 401k. And then once that's established, you could fund it with those 401k funds, which I'm assuming are at Solera. And then you would invest through that new account at the cryptocurrency exchange that's set up for your 401k. I hope that helps.
Dominic wants more details regarding move from checkbook IRA to a trust.
Got it. Thank you so much for submitting this question, Dominic. I'm not sure if I'm understanding it fully, but I'll take a stab at it and feel free to reach out if we can clarify anything further. So I think what Dominic is referring to is moving from a checkbook IRA, I'm assuming, to an IRA trust. An IRA trust is kind of a newer product that we're working on offering. And the IRA trust is a little bit similar to the checkbook IRA in that there's an IRA involved. With the checkbook IRA, that IRA owns the LLC, and that's through the LLC is how you get that checkbook control. With the IRA trust, the IRA funds go into a trust, and then you named as trustee of that trust, that allows you, that kind of structure allows you checkbook control as well. So if you're referring to moving from a checkbook IRA to an IRA trust, again, just thinking out loud here, I think you would need to move the funds from the LLC back to the IRA. I'm assuming close the LLC, establish the trust, and then have the funds move from the IRA to the trust. I think that's what the process would be. Again, feel free to reach out, Dominic, if I'm missing any important details here, or if we can clarify further.
This question is from Chris. What are the major differences between the checkbook IRA and Solo 401k for best investment choices?
Good question, Chris. So of course, a lot of clients are interested in either the checkbook IRA or the Solo 401k precisely because of all of the investment options it gives. And so just to note, the IRS does not outline what you can invest in using a retirement account. It mainly just focuses on what you cannot invest in. So like I mentioned, that category of prohibited transactions that I mentioned earlier. That being said, the checkbook IRA and the Solo 401k are very similar in that they both offer a very wide range of investment options. We love to empower our clients with checkbook control over their retirement account so that they can utilize the retirement funds or invest them into the areas that the client is already experienced and well-versed in. So in that way, the checkbook IRA and Solo 401k are similar. There are some categories that might be worth thinking through when investing with the checkbook IRA and the Solo 401k. That falls under unrelated business taxable income, or UBTI, unrelated debt financing. Those are two categories that, again, don't always apply to everyone as far as the investments. But, you know, if you contact us and explain your situation further, if we feel that it would warrant a conversation with your CPA on that, on those topics, then we will definitely let you know. But pretty much, I mean, just to answer, you know, in a basic way, There's not a whole lot of differences as far as investing. You are allowed to a very wide range of what you can invest, either the checkbook IRA or solo 401k in.
Question is from Elizabeth. How much money can I place into my solo 401k at age 54 without being taxed?
Thank you, Elizabeth, for this question. So this is touching on the category of contributions, which we've got a whole lot of questions on. So thank you for asking it. The amount of contributions that you can make to your solo 401k depends mostly on the adopting business, not so much on your age, but more on what you are earning as far as compensation from the adopting business of your solo 401k plan. So just to mention, the solo 401k does have very high contribution limits, and that is one of the great advantages about it. So, for example, for the year 2023, if you are under the age of 50, you can contribute $22,500 as employee with an additional $7,500 as catch-up. That's just the employee contribution for the solo 401k. And as employer, it depends on the structure of your adopting business. If you're a corporation, for example, you can contribute 25% of your compensation with a combined total, so meaning the employee and the employer, of $66,000 if you're under the age of 50, and then the additional $7,500 if you're age 50 and above. So, as you can see, it's really high. So it's a great, offers a great advantage in that way, allows you to really build up your retirement savings quickly. But again, it kind of depends on, just to answer your question, Elizabeth, it depends mainly on what you're earning, because from the adopting business of your plan, because that's the compensation is what forms the basis for those contributions, and how you would calculate those contributions. That's determined by what you're earning from the adopting business. So hope that helps.
Well, this brings our session to an end. Thank you for sending in questions and for joining us today. Thank you, Minna, for answering the questions. Our next self-directed IRA and solo 401k live Q&A session is going to be on Monday, April 24th at 11 a.m. Pacific Standard Time. If there is a question that we weren't able to get to, or if you have questions that come up in the meantime, feel free to register and submit your questions at the time of registration. But other than that, hope to see you at the next session, and have a wonderful day.